Today we will talk about the credit score and the effect of the credit score on your interest rate. As we know, I will just explain 4 categories of the credit score. The first category is the fair credit score, starting from 580 to 669. Number 2 is the good credit score, start from 690 to 739. And then very good credit score, start from 740 to 799. And the last one is the best one, excellent credit score, which starts from 800 and above. The credit score will definitely affect your interest rate. What I would like to talk about today is that if you have a good credit score and you would like to move it to a very good, or your score is very good and you would like to move it to an excellent one. So let's assume your credit score is 739. You do not have just to say okay on the interest rate you're getting from the lender with 739 credit score. Why? Because with 741 or 742, which is about 3 points different, you can get better interest rate, definitely better interest rate. So please work with the loan officer and ask him the following. Please take a look at my screen, take a look at my credit report, and tell me what kind of credit cards should I pay to move my credit score up from good to very good, or from very good score to an excellent, because I would like to get the best interest rate ever. So with paying some of your debts or your credit cards, maybe not all of them, some of them, not all your credit cards that you have to pay, some of them you can pay and move yourself up from good to very good, or from very good to an excellent credit score. So that way, instead of getting like 2.9 interest rate, you can get 2.7 by raising your score up. Most of mortgage companies have that system on their computers with the loan officer. Ask him about it to move yourself up and pay some of your credit cards and debts. Let's talk on the second point on zero down payment or very low down payment to buy a house. You do not have to have that much money to buy a house. The first loan with down payment assistance is THDA. By the way, it's only in Tennessee. The THDA is asking 3.5% down payment. With 3.5% down payment, if you do not have that much money, you can apply for down payment assistance. The down payment assistance is $7,500, which is going to cover most of your down payment. That's a very good loan. It has PMI, which is mortgage insurance, but at least they will help you with a lot on the down payment. Number 2, American Dream Loan. American Dream Loan is a product with US Bank only. The minimum credit score is 640. It does not have a mortgage insurance. It is requiring 3.5% down payment, and it provides you with $5,500 down payment assistance. You can use the $5,500 towards the down payment or towards the closing cost. If the seller is paying some of your closing cost, then you can use the $5,500 toward your down payment. The minimum credit score for this one is 640. So if you have 640 and above, do not go to any other loans. The American Dream Loan is going to be the best for you. Please go to your loan officer and ask if your income is having the same limit allowing you to take the American Dream Loan or not. Also, I can help you to, if you do not have the rest of the money. Let's assume you're getting a house is $300,000. The down payment required is almost $10,000 or $10,500. US Bank is providing you with $5,500. If you do not have the rest of the money, please call me. I will help you to merge another down payment assistance loan with American Dream Loan to cover the rest of the down payment. So that way you end up paying nothing toward the down payment if you do not have money. So US Bank and American Dream is a very good choice if your credit score is 740 and it does not have a PMI, which is mortgage insurance every month. So you will save about $100 to $200 a month. Let's go to another kind of loans. If you have some money, like 3% down payment or 5% down payment, with 3% down payment or 5% down payment, we have many products. Home Possible, Home Ready, Imagine, and another program called the 5% down payment with no PMI. These loans require only 5% down payment, or the Home Possible and Home Ready and Home Imagine require only 3% down payment or 5%. It does not have PMI. Some of them have PMI, but it depends on your credit score. These are the most common loans that you can buy your dream house with. So please call me if you need more explanation and more information. Let me know your credit score and I will tell you the best one that will be good for your credit score. Buying new construction home. When I'm going to the new construction homes, knock on the door and deal with the listing agent, with my agent as a realtor, asking them to tell me their options. Most of the time, they will ask you to go to their preferred lender. You do not have to go to the preferred lender. Sometimes we imagine that we are getting the best deal with the preferred lender. If you would like to know exactly what is the difference between the preferred lender of the new construction company that will build your home and the lender that you used to deal with, or the lender that you would like to deal with, and it is not on the list of their preferred lender, ask both lenders for LE, which is loan estimation. The loan estimation will be provided from the loan officer and sent to your email, and you can sit with your realtor to ask him any questions explaining. But if you would like to focus on what exactly in the loan estimation, you have to look at 3 things. Only 3 things you can judge which lender you have to go with. Only 3 things that you have to take a look at. Number 1, the monthly payment. Number 2, the interest rate. Number 3, the cash on closing table. Compare these 3 items: monthly payment, interest rate, cash required on closing table. When you compare the loan estimation from the builder, preferred lender, and ex-lender, any other lender, try to find out which one is the best for you, which one is good for you. So if the monthly payment is so high, I'm assuming that the builder's preferred lender is going up with the interest rate. If the cash required on closing table is too high and the interest rate is a little bit lower, that means what they give you with the right hand as closing cost assistance, a lot of them offering $3,000, $5,000, $7,000 closing cost with their preferred lender, which is sometimes what they giving you with the right hand, they taking it with the left hand. Why? Because the other 3 items we talked about with another lender like ex-lender, the cash on closing table is less. That means the money they gave it to you used to reduce the interest rate and increase the closing cost, and they just acting like they helping you with the closing cost. So please take the loan estimation, compare these 3 items: monthly payment, interest rate, cash on closing table, and you will decide yourself which loan is better than the other. Sharif Ibrahim, have a good day and good luck in your dream home.